Imagine sending millions of dollars worth of goods across the ocean, only to find out the bank won't pay you. Why? Because a single, simple date stamp was missing on a piece of paper. When companies sell products internationally, the bankers handling the money don't actually go look at the cargo. They only look at documents. Before they release your funds, they need rock-solid proof that your goods are on their way across the water. To bridge this physical gap between a seller's factory and a bank vault, we use a letter of credit. That is simply a bank's promise to pay you, the seller, once you prove the goods have shipped. The document you use to prove this is called a bill of lading, a very official receipt from the shipping company. A bank requires a specific stamp on that receipt called an onboard notation. This mark acts as the final confirmation that your cargo is physically resting on the deck of a ship. In global trade, trust cannot rely on the physical goods themselves. Because the bank is miles away, they rely completely on strict, standardized document formatting to guarantee the cargo is actually moving. Since bankers deal strictly in documents, that onboard notation acts as a definitive handshake from the shipping company. It confirms they have physically lifted your cargo and placed it onto the vessel. A standard received for shipment document is like holding a movie ticket. It proves you bought a seat, but it doesn't prove you're inside the theater. The onboard notation is the usher scanning your ticket at the door, confirming you have actually entered the journey. To satisfy the rules banks follow worldwide, that notation must provide 4 specific details. If any of these are missing, the bank considers the proof incomplete. First, the document needs a clear statement. It must explicitly say the goods are shipped on board. Next, the bank needs to see the exact name of the ship that is carrying your cargo. You also need to include the specific seaport where the ship is departing from. This location must perfectly match what was agreed upon in your letter of credit. Finally, you must record the exact day the loading process was completed. If even one of these details is missing or blurry, the bank will reject the document. When that happens, the payment process stops. Getting the date right can actually be a bit tricky because not all shipping receipts record the official shipment date in the same way. Sometimes you get a received for shipment form. This is like putting your name on a restaurant waitlist. The shipping company has your goods in their warehouse, but they haven't put them on the boat yet. Because of that wait time, a received form requires a separate, manually added stamp to prove the goods were finally loaded. The date on that new stamp becomes your official legal shipment date. On the other hand, some forms are pre-printed with the words shipped on board built right into the original paperwork. For these, the day the document was issued is automatically accepted as the date you shipped the goods. If you don't realize which type of form you are holding, you might easily miscalculate your shipment date. Missing the deadline in your contract means you risk not getting paid at all. The journey often begins at a factory far from the coast, an inland place of receipt. When a document lists both a factory and a seaport, the bank looks for very specific proof of how the goods traveled between them. On a map, this looks like a truck picking up the goods from a factory and driving them to the coastal seaport. In this scenario, the bank needs absolute certainty that your notation applies to the ship, not the truck. To clear this up, your notation must repeat the exact name of the vessel and the port of loading. This confirms the goods were specifically loaded onto the boat, rather than just arriving at the dock. You have some flexibility with the phrasing. Terms like laden on board or clean on board work perfectly well. But if a document says something like taken in charge, the bank will reject it, because that only means someone has the goods in their possession. Precise language is the only tool a banker sitting at a desk thousands of miles away has to distinguish between cargo sitting in the back of a truck and cargo actively crossing the ocean. To keep your payment moving, your documentation has to be completely clear. You need the correct statement, the vessel name, the loading port, and the exact date. You also need to track your dates correctly and use exact location names for complex routes. In the world of international banking, physical reality is secondary to what is written down. If the paperwork does not show an action happened, then as far as your payment is concerned, it never did. Mastering the onboard notation ensures your physical shipment connects smoothly to the financial world. It acts as a shield, protecting a seller's revenue and cash flow. Of all the details we discussed today, Which one do you think a busy exporter is most likely to forget during a rushed shipment, and why? Let me know in the comments.